Hello guys, my name is Sagar Goyal and today I am with Gulab Singh here and we are going to discuss the microfinance in India, or in short from the micro loans in India. Firstly, to start with, what is microfinance? Microfinance is a type of banking service that is provided to poor businessmen or small business owners who have no other access to financial services or qualify for a standard bank loan. Microloans are given to those living in still developing countries who are working in a variety of different trades that includes carpentry, fishing, and transportation. In simple words, the goal of microfinance is to give low income people an opportunity to become self sufficient by providing a way to save money, borrow money, and get insurance.
Hello guys, I'm Gulav here. So India is likely to have a large possible demand for microfinance. That's why it makes sense to consider the changing face of microfinance for rural development in India. In India, loans are extended to borrow to allow them to initiate a business, repair their homes, and improve the general living condition of their family. Whenever there is growth show up in the credit infrastructure, the flow of credit to poor, especially to the poor women, remain near to the ground. As a result, National Bank for Agriculture and Rural Development was set up with the objective of creating appropriate policy for rural credit, development of rural credit institutes, and liquidity support to banks. After a time, it was experienced that the existing bank policies and procedures were not well enough or developed to fulfill the basic need of poor. It was better to provide poor the easy access to these services rather than just creating for them. Obviously, if a person feels that the access to service is difficult or the service institutions are unfriendly, the person will hesitate to move toward it. Thus, there was a requirement experienced for saving and loan products, alternative policies, and new deliver mechanisms which would fulfill the requirement of the poorest, especially of the women. That helped in increasing emphasis of microfinance for improving the access of credit for poor. An increase in the number of NGOs starting their own finance program in zone to develop the people in their respective areas. The most succession in this area is saving and credit group of self-help groups, as well as a variety of specialized microfinance institutions.
Moving further, the existence of microfinance in India. The term microfinance or microloan came into existence in 1970s when organizations such as Grameen Bank of Bangladesh were starting the modern industries of microfinancing. Every microfinance in India can map out its origin back to the early 1970s when the Self-Employed Women's Association, or SEWA, of the state of Gujarat formed an urban cooperative bank called the Shri Mahila Seva Sahkari Bank with the objective of providing banking services to poor women employed in the organized sector in Ahmedabad city, Gujarat. The microfinance sector went on to involve in the 1980s around the concept of SHGs, informal bodies that would provide their clients with much needed savings and credit services. Due to large size and population of around 1000 million, India's GPA rank among the top 20 economies of the world. However, around 400 million people, or about 60 million households, are living under the poverty line. It is further predictable that of these households, only about 20% have access to credit from the formal sector, as well as the segment of the rural population has no good access to the recognized financial intermediary services, including saving services. Hence, microcredit assumes significance in the Indian concept with about 60 million households below or just above the strictly defined poverty line, and with more than 80% unable to access credit at reasonable rates. It is obvious that there are certain issues and problems which have banned the reach of microfinance to the needy. With globalization and liberalization of the economy, opportunities are for the unskilled and the illiterate people are not increasing fast enough as compared to the rest of the economy. In this context, the institution involved in the microfinance have a significant role in the reducing inequality and contribution in the rural development for overall growth.
So, additionally, microfinance and poverty reduction for rural development in India. India consists over a quarter of its population below the poverty line. The World Bank reports that India is a home around some 260 to 290 million poor, numbers that rise to around 390 million if poverty is measured by the international standard of those living on less than $1 a day. So almost half of Indian poor, more or less 133 million, are found in three states: Uttar Pradesh, Bihar, and Madhya Pradesh. So rural area in India is the home of three-quarter of India's poor, which is supported by the increasing urban and rural disparities. The Indian government's poverty reduction strategy focuses on infrastructure, social development, and rural livelihoods. Most poor people manage resources to develop their enterprises and their home over a time. Financial services could enable the poor to force their initiative, accelerating the process of assembling income, asset, and economic safety. Traditional finance institutions rarely lend money to serve the need of low-income families and women-headed households. A large number of small loans are needed to serve the poor, but lenders prefers dealing with large loans in small number of minimize administration cost. They also look for guarantee which may low income households do not have in hand. Over the last 10 years, however, successful experiences in providing finance to small entrepreneurs and producers demonstrate that poor people pay back their loans and use the profit to increase their income and assets. This is not shocking since the only realistic alternative for them is to borrow the money from informal market. Community banks, NGOs, and credit groups around the world have shown that these micro enterprises loans can be profitable for borrowers and for the lenders, making microfinance one of the most effective poverty reducing strategies.
So as we described about the what is microfinance, how the existence of microfinance feels in India, how it's developed in India. As we mentioned, like there are 400 million people or about 60 million households are living under the poverty line. So the need of the uh, microfinance or microloans came into the existence. We discussed the microfinance and poverty reduction for rural development in India because of the World Bank that reports that India is a home around 260 to 290 million poor, and which the three states the most poverty is found in Uttar Pradesh, Bihar, and Madhya Pradesh. That reports the poor about 133 million people. So moving further, we are going to describe about the microfinance and women empowerment for rural development. As we know, women are the essential part of the society. The role of the woman in economic activities and decision making is very low. Microfinancial schemes play a vital role in increasing women's participation in economic activities as well as decision making. There has been huge growth of organizations known as microfinance institutions, or in short form MFIs, in this field to deal with the microfinancial activities. With increasing demand for rural finance and the shortage of formal resources, the MFI have tremendous challenges and opportunities in microfinance or microloans in India. In India, self-help groups SHGs constitutes of 85 to 95% of women. The reason for this is that women are familiar with the financial responsibilities, making them trustworthy, reliable, and prompt savers.
So as Sagar already discussed about the like women empowerment for rural development, like in India there is not like any kind of a sufficient place for women. So as we know, like women are the essential part of society. So in addition, I'm just gonna talk about the critical issues, like what kind of issues faced by the women. So critical issues for microfinance institutions. This is not a point of consideration that microfinancial services have capability to offer better services than conventional banking service and carry out the needs of the underprivileged people. The significant factor is that external microfinance services should join hand to the running system of lending and or borrowing money in rural areas instead of throwing them out. In this way, the poor people, especially women who require the fund to run their business and family activities in a well organized manner, will get benefit more. Some critical issues for microfinance organizations are as below. So the first one is sustainability. The primary issue is related to sustainability. It has been reported in such news that the microfinancial institutions are comparatively costlier in terms of delivery of financial services. It is partially explained by the fact that the cost of supervision of credit is high while the loan quantity and the loan volume is low. Therefore, it is necessary for MFIs to develop strategies for increasing the range and value of their financial services. The second one is lack of capital. The next part of concern for MFIs, which is one of the expansion path, is that they face a scarcity of own funds. This is a critical constraint in their being able to scale up. Many of the MFCs are socially oriented institutions and do not have adequate access to financial capital. As a result, they have high debt equity ratios. And the third one is borrowings. In this comparison with earlier years, MFCs are now finding it relatively easier to raise loan funds from banks. This change came after the year 2000 when RBI allowed banks to lend to MFCs and treat such lending as part of their priority sector funding obligations. Private sector banks have designed innovative products such as the bank partnership model to fund MCS and have started viewing the sector as a good business propositions. But banks need to be most careful when they feel most confident about MFIS. Banks should find the right technologies to assess the risk of funding MFIS.
So in the last but the not the least, I am going to conclude all that we described above, like the existence of microfinance, what is microfinance, why the existence came into rise, what is the woman importance in India, what's the woman employment and the woman development in India. The conclusion is like the MFIs is leaving enormous economic and social impact. Microfinance provide both savings and loan facilities, and MFI is likely to provide the much needed fund to the potential entrepreneurs of the rural India. Also, it is anticipated that the people would become socially more advanced as they come into the touch with the outside world. In order to be sustainable, microfinance lending should be fixed on the market principle because large-scale lending cannot be completed through financial support. A core conclusion of this is that microfinance can contribute into solving the problem of insufficient housing and rural services as an integral part of poverty alleviation programs and empower women to play a vital role in the society. Eventually, it would be ideal to improve the credit worthiness of the poor and to make them more bankable to financial institutes and allow them to meet the criteria for long-term credit for the formal sector. Microfinance institutes have a lot to contribute to this by building financial discipline and educating borrowers about the compensation requirements.
Thanks, guys. We hope you will like our research about how microfinance or microloans came into existence in rural India and how are they developing. If you have any question about any of the related area, we are going to add our contact information with this research, so please feel free to contact us. Thanks a lot.